Hi, my name is Christopher Mullen, and I'm the founder of the technicaltraders.com website. And today I'd like to share something with you that is really interesting because we are entering a once in a decade opportunity that the last time this happened, I was able to generate $1.9 million from the markets, and it's happening again. So let me walk you through quickly where we've been and where the markets are going, because this is an opportunity that you cannot afford to miss. And I am so excited about it. I have to share with you guys in a video here. So back in 2008, co-authored a book with JT Grenew. We talked about New World Order economics and more importantly, how the stock market, crude oil and gold were all set to bottom, in an imminent bottom. And in February 2009, we finally published it. We saw the light at the end of the tunnel. And a month later after publication, the market's put in a major bottom, and we've been in a huge bull market ever since, years later. So this book played out just as we expected. This is a done deal, but the insight that we shared here, calling the bottom, was almost priceless. Now, going forward, looking at the 2008 to 2012 recovery, I was able to make the $1.9 million, build our dream home. My wife and I, we travel with the kids, and I don't have to worry about paying the bills anymore. And now that we're in a full-blown bull market, which is pretty straightforward for investing, we've got lots of time on our hands. And I wrote this book a couple of years ago called Technical Trading Mastery: 7 Steps to Win with Logic. And in this book, I cover everything. If you are a long-term investor, I show you step by step exactly how to identify the stages of a market, which is very simple. Anyone can do. And once you know the stage, you move your money to certain positions and you pretty much leave them there for 1 to 7 years. Very simple strategy. Anyone can do it. If you are a swing trader or day trader, this book you're going to eat up, because it's jam-packed with my short-term indicators, how to identify market tops and bottoms on the intraday charts and the daily charts as a swing trader. It's unbelievable, and I do all this in all this type of trading and investing. I invest, I swing trade, I day trade, pretty much whatever chart I stumble across that happens to have some type of setup that I like on any given day. I just trade a strategy, or I take advantage of it, and I just kind of float around to whatever pops up on the screen and whatever my mood and kind of gut is saying at the time. So the whole point of this video today is to try to excite you and get you motivated and inspire you to want to trade with us and join our team on the journey to make another boatload of money during the next massive chaos in the markets and the knee-jerk reaction recovery that follows a year or two later. And, you know, the New World Order economics, things are unfolding. Digital currencies, look at Bitcoin. There is new everything taking place. It's changing the world. It's changing the way we invest and trade and buy things. You can't afford to just sit and let buy. There's going to be a lot of big price action going on and things that, assets that are going to change value dramatically. So let's look at some charts, and we're going to walk you through what's going on and how we can help you and really open your eyes to what we can do together as a team.
Now, before we jump right into the charts of where we are, let me give you a quick rundown of where I've been in the market, why I evolved and adapted to technical analysis, and how it's played out and where we are in the grand scheme of things in the market. Because I think a lot of us have the same story. Either you've made it highly successful and you're out living life and doing things and you're comfortable with the markets, or you're on that roller coaster ride of always thinking you finally think you've got it figured out and you don't, and the market shows you that you don't, and you get set right back down, and it really destroys your emotions and really hurts you mentally, because it is very destroying. The market is unbelievable at tearing people down and killing their confidence. So let me recoup where I've been, where we're going, and how we can take advantage of this. So back in 1997, I got involved in the stock market through Larry Williams. He had a program on commodity trading, and I didn't know anything about the markets back then. But commodity trading looked amazing because you were looking at huge gains. And back then, I didn't really realize the power of futures and the leverage, which are unbelievable. But you need to be a very skilled trader to be trading commodities. long story short, got into trading through school program, through high school, and there was all these competitions. Got into it. Finally, was old enough to open my own brokerage account, which my father had to co-sign because I was only 18 at the time. And I ended up catching this final push up in the tech bubble, and I only made about $8,000, but that was off a $2,000 account, so pretty substantial returns. And of course, I was hooked after that. And during the bear market that followed, I very quickly learned that I had no idea how to trade a bear market, nor could I short a market with my account, and kind of got my head delivered on a silver platter right back to me. And then finally the market's bottomed and I got back into a bull market. And somewhere over here is when I caught on, okay, we're back in a bull market. I need to create an actual strategy that follows my mindset, my beliefs, my time frame that I want to trade and follow the markets. And I did. And I started making some very good money again, climbing this wall, this final push up into the market top. And once I started to see a market top taking place, we had this initial great big bout of selling here, lasted 2 months, big down bars. And that was when I started digging in and realizing, oh, here we go. This is the early warning sign of a bear market starting. And I was ready this time. I had lived through a bull market, uh, struggled with the bull market somewhat. I struggled with the bear market, and then in this bull market here, started to do extremely well near the end. Finally got it figured out, and this time around, I was ready for a bear market. And during this bear market, the 2008 crash down to the '09 bottom, and the recovery back up into 2011, 2012 timeframe, this is where I made $1.9 million. These giant sell-offs with knee-jerk reaction recovery. A lot of money can be made, and that's what I did. I was actively trading and researching, and it was life changing. And in 2011 is when my wife and I built a beautiful property on the water. We built our dream home, and 2012, 13, I wrote a book, and we're kind of this, you can see this shaded white here. This is more or less icing on the cake. The bull market continues to rally. Long-term investments sit tight. There was a couple points here where the market was looking like it was going to get pretty ugly, which was right over here. The market was actually fairly close to rolling back over into another bear market. This is when kind of went dormant in the market myself. We built a home, dream home, waited for the market to confirm whether it was going to break down and start a bear market or if it was going to take off and start another leg higher, which it ended up going higher. And then in 2015, we were on the verge. In January and February of 2016, the market, if it closed down near the lows, we would have been technically kicked into a bear market. And the markets just happened to hang on by a thread and recover. And it just happened to be that there's going to be a new president in place that year. And typically, the first year of presidency is a very strong year for equities. And more or less, I think that saved the market. Markets started rallying up, knowing there's a new president coming. And then, boom, new president, and the market continued to take off. And we are in kind of this level now where we have to be extremely cautious with what is going on. And we are getting back into one of these opportunities where we are very soon to start seeing some distribution selling. We're going to see signs. We already have signs. I'm going to show you here of a bear market coming over the horizon. It is slowly getting closer. But at this point, we are still in a raging bull market. It's just very late stages. It's one of these last final pushes up that we saw back in 2007. Very similar characteristics across the board. So let's just jump over to the next chart here. Again, it took me 10 years to get there. My wife and I, we built our dream home, and this is where we ended up. We ended up having our dock featured on the Bay magazine. It's more or less a picture perfect house, pardon the pun there. We've got beautiful property on the water. I designed the landscaping. We have a finished cabana here, a hatch that opens up. It's a cabana surf hut, and we've got boat, and it's just an unbelievable lifestyle that we're able to live. A very relaxing lifestyle. Here it is in full-blown summer. Lots of furniture out. We always have company over, and water skiing and tubing and wakeboarding, and we drive the newest cars. We've got the new Rover. I've got a pickup truck myself because I have a lot of sports and toys that we play with. Kids love to be on the Sea-Doo and surfing and paddleboarding, horseback riding, canoeing. We love to do motorbike trips, or I love to do motorbike trips down into the States, into the Shenandoah Valley, the Blue Ridge Mountains, and do fishing trips down there. We take annual kiteboarding trip, and every spring we go is a group of us, depending on the amount, 5 to 12 of us. And this picture is funny. This is actually a picture of me actually jumping, and that week we were there, actually we were there for 2 weeks. There was a research group following great white sharks, and there was a 14-foot great white shark in our bay the weeks we were there, just lurking around, and you can follow them with with their website. And so my friend photoshopped this shark in just for fun, but we get to do these bucket list trips all the time, and every year it's an unbelievable opportunity. And with the time and extra money, I started a Kickstarter program, built an electric hydrofoil, remote control hydrofoil that you can surf on and ride, 2, 3 feet out of the water, and completely silent. And it's just unbelievable the feeling that you can have with the hydrofoil board. So it gives us this opportunities to do other fun things than just work. And obviously, in the winter season, we go to nice warm places. The kids love it because in the winter, this is my son, this is how he looks. He's not a huge fan of the winter, so they definitely prefer playing on the beach and running around and having a blast. But again, it took me 10 years. And luckily enough, I started when I was 16 in the stock market. So 10 years still keeps me fairly young to be able to do all this stuff and to be more or less financially free. At the age of 27 was when I built my dream home and had all this unfold. And it can happen again. It's going to happen again for a lot of people this time around. So let me walk you through the stages of a stock market, because this is the foundation. This may sound really basic to some of you if you already know this stuff, but everything is based off this type of analysis, whether you're a long-term investor or a day trader. These stages happen on every time frame. They're fractal. Long story short, we want to focus trading stage 2 markup, which is a bull market, and a stage 4 decline. Stage 1 accumulations are tough to trade. They kind of meander around, choppy, very unpredictable. And stage 3 is the same. Stage 3 is much harder to trade, way more volatility, and great for day trading. This type of volatility intraday wise is unbelievable. So you need different strategies for each stage. And as a long-term investor, you're either long and then cash, and then short and then cash. It's a pretty straightforward strategy. It's and this is one of the types of cycles, or this is the stage analysis of the stock market. Now, if we take the same type of thing, we can overlay the psychology of the market, of the humans, of traders, investors. And we've got our stage, more or less, it's kind of over here, your stage 1, where nothing happens. It's just kind of dormant, and really you kind of want to steer clear of those areas and focus on whatever's hot at the time to trade that's in a bull market. If it's not in a bull market, you really don't want to mess with it. But more or less, we've got our markup stage, our stage 2. And this is when you're doing breakout trades, when you're trading chart patterns. This is when they're going to work out majority of the time, and you can just fire one trade after another and take off. Where we are right now, though, we are in this euphoria stage. We are seeing every single dip in the stock market being bought up. We've seen a few huge waves of distribution selling that by the end of the day or the following session, that all that selling was bought right back, and everyone is just buying. Everyone's in a feeding frenzy for stocks. And this level here, this euphoric stage after a multi-year bull market, and everyone's buying for no reason at high valuations. The only reason they're buying is because they're greedy and they don't want to miss out. This is the point of maximum financial risk. You're buying at a market top, a bull market top. and eventually things are going to roll over, and we're going to start to see things crash, and there'll be a time when we get down to this accumulation stage and early stages of a stage 2 markup where we've got the point of maximum financial opportunity, where the market, the downside has been flushed out, it's more or less done, and you can plant your seeds, your long-term capital, and let it grow and mature for another multi-year bull market. Bull markets will last 3, 4, 7, 9 years, and it's such an easy play as a long-term investor. Now, looking at the 2009 bottom to where we are today, you can see here these green lines, these green areas are QE programs, quantitative easing. You can see every time one kicks in, we've got a huge rally in the market. Well, we almost rolled over here with the markets in 2015, 2016. It was a very tough time to trade. But here we are now, new president in, and the markets are taking off, and we're in this euphoric stage. There is no real reason to be buying. There's no QE programs. It's just in rally mode. Valuations are out of whack, and things are going to get really ugly. And I got some really interesting charts here to show you some insight as to what's unfolding underneath the stock price layers here. So taking a look at just the long term, this is the last. This is since I've been involved in the stock market, and this is the last the 2001 2000 market top, the 2008 market top, and we're coming into the next market top. We're not there yet. At any day it could start, but I mean we won't know it's a top until it really breaks down and starts to move lower, which is several months down the road. But during these red boxes, these times, investors are extremely confident. There's no fear in the market from investors. They just keep buying, buying, and buying. And this is also when we start, if we look under the hood of all the companies, businesses are starting to show signs of slower growth, and we start to see things erode. And it is happening. We've seen records amount of share buybacks. It's unbelievable. Companies aren't really thriving in a big way, the majority of them, but they're buying their shares back, so their earnings per share looks higher. And their earnings are more or less fabricated to look better, and that's what's supporting the market. It's false beliefs, it's manipulation, and this happens over and over again. This happens during every bull market cycle. It's nothing out of the norm, but you've got to be aware that it's happening, and it's just it's clouding people's judgments, and it hurts a lot of people in the long run. Now, these green boxes now down by the bottom, these are when investors are depressed. These are the stage 3 and accumulation stages of the market, where everyone knows we're in a bear market. They've lost a ton of money. They're giving up. They're selling their positions. They don't ever want to touch the market again. From a business standpoint, businesses in general they've gone out of business. They are struggling. They will do anything they can to get a sale. And as an educated investor, as we are, this is when we want to get into a business, because businesses from this point on will thrive. This is when you can buy a business that's for pennies on the dollar. You can get prime real estate or commercial space for your business. You can get licensing rights for a product and territory at unbelievable deals with great commissions, because everyone is struggling. And here you are sitting back, hopefully made a lot of money during the collapse, with a lot of money sitting here ready to get repositioned for the next bull market and the new economic cycle going up. And you can buy or build businesses during these times when everyone else thinks you're completely crazy. And then from that point on, you've got years of a growing business going forward. It's just an unbelievable time, but you have to understand this, and you have to be able to step back and see it from a distance. And that's what we do at Technical Traders. Our team, we identify these things and show you this is where we are. This is what you should be looking at or thinking or feeling. And this is what should be happening going forward. So looking under the hood a bit more. Now, if we look under the hood of the car, this is the high yield corporate bonds. And corporate bonds typically start to fall off in value before the markets do, the stock markets do. And back in 2007, 2008, they started to roll over. That's as far back as this bond fund goes, but they were moving down. And then, of course, we went into the financial crisis, and we saw the full bear market grab hold and crash. But here we are again. We came right down to 20 in the first 2 months of 2016. We were flirting with some significant topping levels here. That if the market was to close below this, that would be an extremely bearish sign. But of course, we have another leg higher, the euphoric stage with a new president in place, and we saw this rebound. And of course, I think a lot of people started dumping money back into corporations, anticipating a strong year for companies going forward. But you can see we're starting to run out of steam here again, and money is flowing out of these high yield bonds. They're worried that corporations aren't going to be able to pay their debts. They're going to start to struggle. They see their sales dwindling. And people who invest in these high yield bonds are typically people looking under the hood and digging through the financials to see if they really want to invest in these companies and put their money to risk because they're getting a high yield, but it's because these companies are higher risk. So let's dig a little bit deeper here. Now let's take a look at the Fed delinquency rates on commercial and industrial loans. Back in the early 90s, we saw delinquency rates, companies not being able to repay their loans, start to rise. And then we saw the bear market take place. Happened again in 2000, 2001. Companies couldn't pay their debts. Their sales weren't there. They had huge exposure. And then we got into the 2001 bear market. These red sections are the bear markets. 2007, rates started to rise and huge delinquency rates spiked up. Here we are again. It kind of plateaued here for a bit, but the overall trend is moving up. Companies are starting to have troubles paying their debt, and we've got record low interest rates. So just imagine how much debt they must have when their rate is almost zero. It could be very painful for corporations. Let's go one step further and look at the emotions of the market. 2008, this is the VIX, the fear index. When the VIX is low, it is time to go. That's the saying for the stock market. And we are at the levels that we saw back in 2007. It happens a few months before the actual market does top out. And you can see what happened. We are back at these levels, and the markets are very close to there's no fear in the markets, and when there's no fear, there's only one way for it to go, which is up, which means there's going to be some selling and fear is going to get into the market. So this is a really interesting sign, and this tells us that we're in the euphoric stage. No one has fear. Everyone's buying stocks. Everyone feels like $1,000,000 because everything they buy goes up. This is when they're going to get their heads delivered on a silver platter. We are walking into a massive downward correction. So if we take a quick look at the 2000, this is the tech index, which more or less is the Nasdaq. They almost look identical, but this is the tech run up. We had the accumulation stage and the markup stage, and then the hype, the big final blow off where everyone got involved in tech stocks. And then we got into a topping formation and a breakdown, and we entered a stage 4 decline, a bear market. Well, if we take a look at the price action we've had the accumulation, we've got the bull market, and we've got this hype mode where we've taken off, and this is going to end in a dramatic move. You've got to know how to make money in a bear market. A lot of people do not want to short sell stocks. That means selling shares of a company or an index that you do not own. There is potentially unlimited risk because the stock market can go up and up and up to infinity, which means you've got unlimited downside risk. But if you want a simple play, you can buy an inverse ETF like an SDS. And during the last bear market, all you'd have to do is once the bear market was established, you can buy this SDS and just hold on to it until the new bull market looks like it is about to be established. And during a time when most investors lost 55% of their life savings during the bear market, you could have been up 174% during the same time with one position and just knowing we're in a bear market, and you just sit and wait it out. And every month you check the charts and we go over our checklist. Are we near a bear market bottom, or have we started a bull market? And if so, we exit the position and we move on to the next fund. And looking at that, once we do hit a bear market bottom, we can buy a simple leveraged long ETF that we just buy it, and we could have generated at this point 1,153% return during a time when the SP 500 did 255% return. Both are killer returns, But I mean, you can leverage this and get a lot more out of it with the exact same trade, just in a leveraged investment with 2 times, 3 times, 4 times the investment leverage involved. So really exciting times. We can make a ton of money during this sell-off and during this rally, the bear market or the bull market that follows. And if you're a short-term trader, like if you get down to the intraday charts and swing trading, then wait till you see these charts. This is what I talk about in my book, Technical Trading Mastery. I show how we use cycle analysis, and more or less, as long as this green line, as long as this trend line here is green, we're looking to only buy cycle lows, dips in the market, oversold conditions. So looking to buy trim positions, buy trim positions, buy trim position. We're looking to do this over and over again, and we share this in our daily pre-market video, our analysis for the day, if a gap up should be filled or if we're going to see it continue to move, all these things. And really powerful stuff when you have the right indicators and you know how to read them. And as a swing trader, this was really interesting. I was going through some older presentations and slides that I had done a while ago. I came across this chart in the slide. So I decided, okay, I'm going to pull it up and just see how this particular forecast played out in our previous presentation in 2016. And so let me just show you so more or less, long story short is we've got forecasting analysis, takes the current cycles in the market, you blend them together, gives you the bias and where the market should be going and looking forward. And this is going forward a couple months. So I pulled up the chart, I overlaid them, or I put them, stacked them on top of each other. And this is the original chart, forecasting forward, I think it was like 60 or 90 days or something like that. And then the bottom chart is the actual price action. You can see cycle was showing another pullback and then a rally all the way up and then kind of just fading sideways. And we had that final pullback. It actually came down for a really nice double bottom formation. And then we had this big rally all the way up and then the market faded sideways. And this is all based on technical analysis, cycle analysis, momentum, all these things blended together give us this insight to know if you're a swing trader. Could you imagine knowing that you could catch these moves and when you want to probably start trimming and moving to cash and waiting for the next either downswing or the next rally to take place? It's unbelievably valuable as a swing trader, day trader, and investor. So the bottom line is we've got all the tools you need, daily analysis, daily pre-market videos. We share our trades, our ETFs trades, our stock trades. We cover Bitcoin, you name it. We're covering everything that's moving. And the bottom line is technical analysis equals opportunity. And we've got a bunch of technically proven strategies that we have been trading for a long time. And our services here at thetechnicaltraders.com will help you walk through the next 2 years in a very controlled and comfortable, and you'll actually be excited about big movements in the markets. And when people are losing their shirts and in a panic, you'll be totally comfortable and cool with what's going on because you're not caught off guard and you're either avoiding it or you're taking advantage of that particular move at that given time. So right now, as a special offer, because we have yet to get into the bear market, we're still a little early. We're offering our free for our annual and 2-year subscription plans, the Global Financial Reset Wealth System, and it's going to get you prepared for what is unfolding. We're covering stocks and Bitcoin and the precious metals. There's going to be unbelievable opportunities, and so we're throwing this in if you want to join us for this next 2-year ride through the financial markets. That is going to be like a crazy ocean. So hopefully this helps, and be sure to check out our website, thetechnicaltraders.com, and email us if you have any questions. Thank you.